Hello students, welcome to Global Online. In today's lecture, we are going to see NTA UGC NET Paper 2 Commerce 2022 batch, and this is a lecture 6 of unit number 2, that is Accounting and Auditing unit, which is one of the most important unit under the Commerce syllabus. In today's lecture, we are going to see auditing and recent trend in auditing. Before we start with the lecture, I want to tell you that we the Global Online providing the course for the paper 1, in which we are providing you the daily life lecture, notes on all the topic, last 10-year question papers with a detailed explanation, test series covering 2500 MCQ with the detailed explanation. To get this, download our app Global Online or WhatsApp on this number. Okay, and the fees for this is 3500 rupees only. Students, we are also providing course for the UGC NET Commerce Paper 2, for which you have to download our app, that is Global Online, from your Play Store. Once you download the app, you have to register your number and go in the store and search for the UGC NET Commerce Paper 2. In this course, you are getting the complete video lectures on all the unit, notes on all the unit, test series, plus the previous year question papers with a detailed explanation and target based preparation. And if you are taking this course, the paper 1 you will get the free of cost. No need to buy the paper 1 separately. Okay, and the cost of this course is 7000 rupees only. Let's begin with the lecture. What is auditing? Here the auditing is a systematic examination of the books and the record of the business or the organization in order to ascertain or verify and to report upon the fact regarding the financial operation and the result thereof. So here, who is doing audit? The auditor will do the audit. The person whom the business or the organization will appoint called the auditor, and he will do the audit. Auditing is nothing but the systematic examination of the books and the record of the business. Whatever the business has done, whatever the organization has done, the auditor will verify that. Okay, in order to ascertain or verify and to report upon the fact regarding the financial operation and the result thereof. The main object of auditing is to help the auditor to form an opinion as to whether the books of account and the financial statement show the true and a fair view of the business. Here what the auditor is doing, auditor is giving his opinion on the books of the account, on the financial statement of the organization, and he will give his opinion which will be a true or a fair view of the business. Okay, the subsidiary object of auditing is to detect and prevent the errors and the fraud in the books of the account. The main aim, the main objective behind doing the auditing is to detect or prevent the errors or a fraud which are there in the books of the account. Then is auditing standard, a new standard to issue by the AASB. Now what is the full form of AASB? Then it is Auditing and Assurance Standard Board, henceforth are collectively known as Engagement Standard. Okay, remember this word, that is engagement standard, and comprises of, first one is Standard on Auditing, that is SA, then is Standard on Review Engagement, that is SRE, third one is Standard on Assurance Engagement, that is SAE, and last one is Standard on Related Services, that is SRS. Please remember this or by heart this, because you might receive the question in the paper. There might be a question like, recognize which one is the auditing standard. You might get the auditing and accounting standard mixed in the question, and they might tell you to tell which are the auditing standard. So please remember this. Then is internal audit versus statutory audit. Now what is internal audit? Internal means means within the organization. The word itself says that it is internal, means inside. Okay. Internal audit is the arrangement within the organization to verify on continuous basis the correctness and the truthfulness of the transaction by the salaried staff. Okay. Internal audit is within the organization, and who will do this audit? The auditor of the company will do this audit. Then a statutory audit is the examination of the books of account of the business by an external auditor. Okay. Who is doing this statutory audit? Then is a external auditor. And the report that of a profit and loss account and a balance sheet are drawn according to the provision of the law, and a financial statement reveal the true and fair view of the result of the operation and the financial state of affairs of the business. Okay. What different things has to be a cover in audit? That is principal aspect to be covered in the audit. Now it will be the internal control system, review of the system and the procedure, accounting principle. What different principles are there which we have to see in the audit? Then is the books and the statement, verification of the asset. What different assets are there? Verification of the liability, the truth and the fair view, statutory compliance and the report. Benefits of the audit. Satisfaction of the owner. The owner will get the satisfaction after doing an audit. Then is a deduction and a prevention of the error and a fraud. If there is an error, if there is a fraud, that can be a find out while doing an audit. Verification of the books of the account. The auditor will verify the books of the accounts. Independent opinion. He will give his independent opinion. Okay. There is a moral check. Protection of the rights and the interests of the shareholder. Ensure the compliance with the legal requirement, straighten internal control system and reliance by the outsiders. So these are the different benefits which the organization will get after doing a audit. Then is a limitation of the audit. Audit involve the higher cost. Yes, to do the audit, it requires a higher cost because the organization, the businessmen have to hire the auditor who will do the audit, and for this require the higher cost, right? Because the organization have to pay to the auditor. Audit involves reasonable length of the time. Again, the auditor will take a time. The length of the time is required to do the audit, to do the verification of all the things. Based on the test check, evidence obtained by the auditor are persuasive rather than the conclusive. Auditor cannot determine the appropriateness of an accounting estimate because of the uncertainties involved in it, and the audit is based on the information provided by the management. The audit, whatever the auditor is doing, is based on the information provided by the management. Okay, he cannot do his own thing. He have to give his opinion on the base of whatever information he is having. So it is based on the information provided by the organization or the management. There is a secretarial audit. Secretarial audit is a compliance audit, and it is a part of the total compliance management in the organization. Please remember this, that a secretarial audit is a part of the total compliance management in an organization of the company. Secretarial in a practice has been assigned the role of secretarial auditor under section 2 clause C clause V of the Companies Secretaries Act 1980. Please remember the section here and the act, that is a 1980. There is a cost audit. The Institute of Cost and the Work Accountant of India is defined the cost audit as a system of the audit introduced by the Government of India for the review, examination and appraisal of the cost accounting record and attain the information required to be maintained by a specific industry. Now, why this audit is introduced by the Government of India? To review, examination, the appraisal of the cost accounting record and the attendance information which is required to be maintained by the specific industry. Okay, The cost audit is useful for the purpose of the cost control, cost reduction and a proper utilization of scarce resources. Okay. Now, why this cost audit is required? Why it is useful? So that the company can control the cost, okay, which is unnecessary. Cost reduction and a proper utilization of scarce resources. The resources which are scarce, which we can utilize properly. Section 148 of a Companies Act 2013 contains the provision regarding the cost audit and contain that cost audit, whenever conducted, is in addition to the statutory audit conducted under Section 143. Okay. Then is a tax audit. In India, the Income Tax Act 1961, Section 44AB provide for the compulsory audit of the account of a certain income tax assessee whose turnover or a receipt exceeds the specific limit. Okay, there is a limit for the turnover or a receipt. Okay, so it is a compulsory audit of the account of certain income tax assessee. Okay. The objective of such an audit is to assist the tax authority in making the correct income assessment of the assessee concerned. The tax auditor has to specify the report on a certain transaction which have an effect on the income tax liability of the assessee concerned and are thus important to the tax authority. This is called a tax audit. Here what you have to remember is the Act of the income tax and a section. The another important audit is a management audit. Management audit is a emerging concept of the auditing. Now here the management audit is an act of evaluation of all the activity of all the department with a view to provide the appropriate suggestion to the management to help their work. So here what is management audit? Management audit means the evaluation of all the activity which is going on in the organization, the activity of all the department with a view to provide the appropriate suggestions. The main objective of the management audit is to improve the profit earning capacity, work of the management, objective of a program, social objective and human resources development so that the organization goal can be easily attained. Here what is the main aim or a main objective of a management audit is to improve the profit earning capacity of the organization, can improve the work of the management, social objective can be improved, the human resources development can be improved so that the organization can easily achieve their target, can easily achieve their goal. This is the main objective of management audit. Then is vouching and verification. Please understand this. Vouching is a process of checking the vouchers related to the transaction recorded in the books of the account by the auditor himself or by his assistant or by an audit clerk. So here the vouching means what? Vouching means the process of checking the vouchers. Whatever vouchers are there in the organization, that will checked by the auditor or his assistant or the audit clerk. Vouching means to vouch, to examine the vouchers. On the other hand, the verifications means to verify the assets and the liability of the business. Okay. As a simple word, verification, we understand that it means to verify whatever things are there, whatever things are happening in the organization, we will verify there. We will verify the assets and the liability of the business. Both the two terms are a first two step of the auditing. In fact, the vouching help in process of the verification. Audit report. Under section 143 clause 2 of Indian Companies Act 2013, the auditor shall make a report to the member of a company on the account examined by him and on every financial statement which are required by or under this act to be laid before the company in a general meeting, and a report shall, after taking into the account the provision of this act. The auditor who is doing an audit have to make a report on whatever he has been examining, okay, and that report has to be submitted by the auditor to the company before the general meeting, okay. Then is unqualified opinion in the audit report. When the unqualified opinion in the audit report is submitted by the auditor, when the auditor do not have any reservation or any objection regarding the information provided by the organization under the audit, and then he issue an unqualified opinion, okay. This opinion signifies that auditor accept the accounting treatment given to the various transactions, and a profit and loss account show the true and a fair view of the transaction enter into the organization during the period, and a balance sheet show the true and a fair view of the state affair of the organization at that point of a time. This report is also known as the clean report. Please remember the another name, that is a clean report. Adverse or a negative opinion and in a audit report. When the auditor will provide this, if the result of the examination of the books of the account, the auditor conclude that he does not agree with the true and a fair view of the financial statement under the audit, he expressed the adverse opinion, negative opinion, okay. Where the auditor expressed the adverse opinion, he should also state his report the reason for the same, so that the reader can assess their significance and effect. Here what the auditor is doing, here the auditor is not agreed with the audit, with the whatever the organization is doing, that is the report is not a true or a fair, okay. So what he is doing, he is giving the adverse opinion, he is giving the negative opinion. Then is qualified opinion. In this situation where neither the unqualified nor the adverse opinion is appropriate, the auditor will give the qualified opinion. In this situation where the auditor has some reservation about a financial statement with though the significant but not a significant, so that to warrant the adverse opinion, and the auditor is agree to a large extent with the truth and the fair view of the financial statement, then he will give a qualified opinion. As per this, the opinion subject to the certain reservation or a qualification stated, the auditor agree with the proposition stated in the financial statement. There is an energy audit. Energy audit is related to the energy which is used by the organization. Energy audit is defined as the verification, monitoring and analysis the use of energy, including the submission of a technical report containing the recommendation for improving the energy efficiency with the cost benefit analysis and the action plan to reduce the energy consumption, okay. And this given under the Energy Conservation Act 2001. Please remember this act and the year. The functions of the energy auditor could be compared with that of a financial auditor. At the moment, while energy auditor is not yet a mandatory requirement on all the India basis. So this is not a mandatory. The financial auditor is a prerequisite for any organization. Energy auditor is normally accepted to give a recommendation on the efficiency improvement leading to the monetary benefit, and also advise on the energy management issue. Then is an environmental audit. It is related to the environment. The objective of an environmental audit are to evaluate the efficacy of the utilization of resources of a man, machine and a material, and to identify the area of environmental risk and liability and the weaknesses of the management system and the problem in a compliance of the directive of the regulatory agency, and control the generation of the pollutant or a waste, okay. Whatever the organization is doing should not harm our environment, okay. There should be a limit. we shall not pollute our environment, okay, or we shall not throw the waste in the outside so that we can't harm the environment. Then the safety audit. Safety audit is related to the safety which is provided in the organization. Safety audit is a planned, independent, documented and systematically approach of determining the success level of a health and a safety management system. Okay. It involves the collection of data, analyzing it and result compared with the organization health and safety objective and organizational best practice. So basically it is about the health and safety which is provided within the management or within the organization, which we are going to see in the safety audit.